Head of Asset Management and Fund Manager James Timpson is here to talk us through April 2025, a month that started quite scarily with what we know as Liberation Day. James, fire away.
Yeah, so a month ago we were sat here, me and Jake, doing the quarterly update with you, and we were right in the midst of a lot of market turmoil. So yes, Liberation Day, 2nd of April, Donald Trump unveils a sweeping array of global tariffs, and the market panicked. Investors were worried that all of these tariffs could lead to a big global recession. So within a few days of those announcements, the MSCI World Index, which tracks global equities, that was down around 10%. The VIX Index, which measures implied volatility of the US stock market, that reached its highest level since the COVID crash, all the way back in 2020. About a week after Liberation Day, Donald Trump comes back out and he says he's going to delay these tariffs for 90 days. And this sent a wave of relief across equity markets. I think on the day of the announcement, the S&P had its best day. That's the S&P 500, that is. It had its best day since 2008. And in fact, since then, even though there's still plenty of uncertainty, investors have been eased enough that actually the FTSE 100 has been on a record-winning streak. We've got this chart here which shows the daily returns of the FTSE 100 since the start of April. And you can see those big negatives right at the start of the month. But then from the 10th of April onwards, we've had 16 consecutive days of positive returns. Some near misses there, but they all count. And at the time of doing this video, the index is slightly down. It's down about 0.2%. So as it stands, it's not going to continue to 17 days. But we'll see. We'll see what happens. But yeah, that is a record-winning streak for the FTSE 100.
So down and up, two sides of a coin. The strength of the dollar, how has this been impacted?
Yeah, so the dollar has weakened throughout the last month or so. And that's because, if these tariffs do go ahead, then it's likely that investment into the US will be weaker. It could cause inflation in the US to go up, which makes it less likely that the Federal Reserve will cut rates. So the dollar has just weakened a bit in the last month or so, which is quite unusual. Normally in periods of market turmoil, such as the one we've just seen, the dollar is quite defensive. Two recent examples being the global financial crisis and the COVID crash, during which the dollar was really defensive. It's just this particular scenario hasn't done so well, and that's again largely because of US-specific reasons such as these tariffs reducing demand into the US.
How invested are we in the dollar, in the Courtiers funds?
So we have exposure to the US dollar among several other currencies, but technically we are underweight the dollar. Because even though, take the growth fund for instance, which has around 40% exposure to US equities.
That sounds like quite a lot.
Well, 40% is actually underweight when you consider that the MSCI World Index is actually 70% in the US. So We're quite underweight US. But even then, although we have around 40% in US equities, the fund only has about 20% exposure to the US dollar. And that's because some of our US equity exposure comes through futures, which gives us exposure to the index, but not the currency sat behind it. But in any case, we can control the amount of currency exposure we have through the use of instruments such as futures.
Sounds quite technical, and why the investment team are in the seats managing that.
Yeah.
Great, thanks James. Now, with the bank holiday, it's a little later into the month, so I wonder if there's already any clues about how this month might pan out. And we are seeing in the news potential easing of the tariffs and potential agreements coming into force. What do you see coming? Yeah,
so it was about a month ago that Donald Trump, announced the delays to the tariffs. We've still got 2 months until theoretically they could come on. But yes, I'm sure we'll see plenty of sort of jostling to try and ease the situation. I know China, which is arguably the worst affected in the trade war with the US, that's been taking measures to try and ease the impact of those tariffs as much as possible. And it'll be interesting to see how long this winning streak continues. Will it end today or will it go on? But overall, there's no real need to change the way we're doing things. We're still using that keyword, diversification, still making sure we're not overly exposed to any sectors or countries in particular. And really, you just have to sort of hold firm. Even when you see those horrible periods like early April last month, you have to just stick to your guns, knowing that in the long run, investing in equities, in a diverse range of equities, is going to result in the strongest risk-adjusted returns in the long term.
So just quickly bringing us to a close, give us a little peek, insight into an exciting stock that's come onto your radar.
Yeah, so one sort of positive you can take from periods of market stress, like the one we saw last month, is that a lot of stocks are potentially become quite cheap again. And a stock we've held before, Lenovo, obviously quite a big presence in China, that, along with lots of other Chinese stocks, got particularly hit quite hard last month due to the ongoing trade war. And because of that, it actually appeared on our radar again as being a potential value stock. So we looked at it again, and we decided, yeah, okay, this is going to be a good inclusion in the fund. So that now appears in the emerging market portfolio in the cautious, balanced and growth funds.
James, thank you very much. Continue with the good work, yourself and the team, and I'll look forward to catching up with you in June.
Thanks, Leo.
If you have any questions, please do speak to your advisor or contact us. And as ever, thank you for watching.